big development because SEBI has barred Jane Street Group from accessing the country's security market, citing an order the regulator posted on its website. Now, SEBI has also ordered Jane Street to deposit 4,800 crores in unlawful gains over alleged Nifty manipulation on expiry days. We have Ankur to tell us more. Ankur, very good evening. A significant development, but more importantly, can you put that into perspective for our viewers this evening?
Yes, SEBI has barred 4 Jane Street entities from accessing the market, and why it has done? Because SEBI says Jane Street used the strategies to influence the index levels as well as making profit, which seems manipulative. Now, probe has been triggered after US lawsuit actually revealed the alleged misuse by the firm of Indian Strategy, and SEBI has identified the exact amount also. The exact amount stands at 4,843 crore of total illegal gains during this activity, and this has happened in 21 days. Apart from that, if you talk about overall profit, Jane Street has made 44,358 crore profit in index options, and this lies between January 2023 to March 2025. Now, one of the pages which mentions about Jan 17 incident, and that is one of the examples which can be given actually what happened. So what happened on Jan 17? The firm actually bought 4,370 crore of Bank Nifty stocks and futures in the morning. Later, simultaneously, there was also a position which was built of 32,115 crore short position. And what happened in the afternoon? Sold 5,372 crore worth of Bank Nifty stocks and futures. Now that dragged the index lower, and later on the firm was able to manage 735 crore of profit in that day itself, and against a 61 crore of intraday loss in cash future. So made a profit in options and loss in 61 crore due to this strategy, and that happened in cash and futures. Now, this is not one of the instances which happened only on Jan 17. SEBI has identified several of these kind of instances and the strategies which was applied by the company for market manipulation, which is flouting of norms of SEBI. Now, as far as Jan 17 is concerned, there was also hike in terms of turnover. Cash market turnover in 12 Nifty stock, Bank Nifty stocks was 29,225 crore, and similarly 12 Bank Nifty stocks turnover was 43,589 crore. But overall, if you just sum it up, the point which SEBI is trying to make is that Bank Nifty options versus total market was around 98 times. Yes, I repeat, it was 98 times on Jan 17, and that is the reason why SEBI actually got into action.
All right, Ankur, thank you for joining us and putting that into perspective. But we also caught up with Sanjay Ashar, Crawford, Bailey and Co. and Shailesh Haribhakti, Chairman Shailesh Haribhakti Associates, to decode the same as far as this significant development is concerned. Let's listen in to what the both of them had to say.
So that is a policy decision which the SEBI has to take, amend the regulation, tighten the regulation in order to see that such an event or similar events do not reoccur. This is, look, there are no, in that sense, allegations that they've done something which is not within the four corners of law. It is only that they have been intelligent and clever both in order to trade on the market. So therefore, if you see the order, prima facie, my view is that, look, they've only been little clever and intelligent in order to trade on the market. But it's pure and simple on the preponderance of probability, which is the principle that SEBI has levied this, found out this, and have passed this order. But otherwise, they've nothing illegal which they've done in order to get a slap of a huge penalty, in my view. In order to develop a proper healthy market, there has to be a regulation which is a win-win situation both for the traders, both for the quant funds, as also satisfying the or protecting the retail investors, and at the same time following the law in letter and spirit both. So therefore, you do require a proper regulation in order to see that the quant traders and the quant funds are able to trade on the market.
What SEBI is doing is guarding the integrity of our capital markets. The conduct of Jane Street seems to indicate that they have used through multiple entities and through multiple markets the arbitrage opportunities and actually manipulated indexes and prices in a way that will derive for them profits in one market 12 times the loss that they would incur in another. And they did this consistently and despite a warning letter. The way that the whole transaction has been described in the order gives rise, in my mind, to the clear conclusion that it was illegal, particularly because the regulation was amended to make sure that at the end of the market, if you uh, put through massive quantum of transactions, that is going to be considered as illegal. And therefore, in my humble view, this is an illegality based on which the impounding of 4,843 crores has been made. And this is not a penalty. This is an impounding of illegal gains. Penalty will be discussed and decided after the full investigation is over and Jane Street has the chance to actually come back and make their own submissions.